On non-farm payroll Friday, I'll just consider it a caution day because what we have is an event at 8:30 Eastern that could sort of pre-exhaust the market going into the open. And then also because we're getting this giant piece of macroeconomic data, meaning the jobs picture, it could also change the way in which traders are viewing what Powell is going to do after July. So number one, the rate hike in July is coming. Number two, what about after July? What about September, November, December? Do we see a second quarter point hike or not? Do we go into pause or do we see one more hike? And the jobs number really did miss. Not only was it revised lower for the previous month, it was also a miss on the current month, and it was also a tick up in unemployment. So, that takes us to this whole idea of bad news or bad data is bullish for stocks, right? And indices, right? If it's bullish for stocks, it's bullish for indices. And that's what we had. It took equities until about initial balance, right? The first hour of the day to even start to acknowledge that this non-farm is actually kind of bullish because we're expecting less possibility than even yesterday for a potential hike. So let me show you what that looks like here. So here's July. Gang, forget about July. Stick a fork in it. It's done. The conversation now is, do we see a hike in September, November, or December? And that's a little bit lower today than it was yesterday, thanks to non-farm. Market takes off, all right? So the first trade we took this morning with the 8:30 hot zone, and that's something that we'll do with 8:30 high heat hot zones, was a short, right? So let me show you what that was. This morning, the whole idea was, and this was the hot zone setup, that's the alert. We short at 15,266 and a quarter, 15,297, 15,325. We give this no more than 5 minutes after the hot zone. So hot zone comes out at 8:30 Eastern. By 8:35, whatever's filled, that's what's filled. All right. And we ended up with both the aggro and the moderate fill, and the scale out was 15,207 and a half. And that was all taking place in, here we go. That move right there. That was it. That was the move. Okay. And so ultimately what we want to remember is using the volatility zones, even in the pre-market, works really, really well for 8:30 hot zones. Now, in one reality, we can be done, right? I trade futures and I trade the options. So this is a futures trade, right, that we did in the mastery. And then I can take a look at some options trades. Now, the options trades got tricky today. We did have Tesla. We had a small stop on that, 1.25% account risk. And then we had a nice trade in NVIDIA, worked out pretty well. And then we had a quick stop out in Meta. So 1 for 3, but a really nice trade in NVIDIA. I mean, a really nice trade in NVIDIA. So what happens is we end up with an issue of, oh gosh, Meta was a laggard and it never did really get any traction. NASDAQ sells off, takes Tesla with it. But then we end up with strength in semis, grab a relative outperformer in NVIDIA, which has been in an uptrend since the open. And then that ended up moving very nicely. And that was the, let's go back on over here, day trading the open. You can see here, the whole idea was to take advantage of a pullback, right? Just really that simple. And that's the way we want to keep it, just that simple. Ultimately, when we are looking at something like non-farm, use smaller size and, just kind of realize that macroeconomically things start to realign. I want to bring up one other thing here because in the aftermath of non-farm, gang, we are still in buy the dip, right? We are still in buy the dip. So I'm not going to sit around talking about, all the monsters at the top of the stairs. And I know it's sexy to talk about how this has gone too far and we have to sell off and whatever else. But the bottom line is there's a lot of resilience in the indices, and I want to be a buyer of dips. And really, dips are synonymous with the DPMR. I want to be a buyer in the support of the daily price movement range. So whether that's NASDAQ whether that's the XLK, XLC, XLY, SMH, or even to a certain degree the S&P. This is where I want to be focused and still be in buy the dip mode. All right. Not everywhere. I'm not going to talk about buy the dip in the Dow. I'm not going to talk about buy the dip in healthcare. I'm not going to really even talk about buy the dip in financials. Right. We're still very much focused on tech, and the four sectors that I'll look at in line with the NASDAQ futures is tech, communications, consumer discretionary, and semiconductors. All right. Now, there is one other thing that we did, and it's a little bit more in line, and shout out to Bot. Quick little play in Exxon. All right. That should be at break even. The Bot put the traders in the 100 call for the 21 July as price sunk down into support of the DPMR. By the time the bell rang this morning, this trade was nearly back at break even. So don't panic in the pre-market, right? Being patient, letting the morning kind of shake out at least a clearing range, or at least getting to the bell. And this thing had basically clawed itself back to right around break even, and then it's been moving higher from there. So another great trade, Exxon, and then that's going to probably start to put XLE, Exxon, and crude oil futures back in focus. And beautiful move off the daily price movement range there. And that's what we're going to keep an eye on, gang. Long side, be patient, daily price movement ranges. We are still buying the dip. All right. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.